my beautiful people? Welcome back to another video with your boy Skrill, BMO FX Trader. Alright, so guys, if you don't know me, my name is Zero. I've been trading for the past 2.5 years. A lot of ups, a lot of down. Welcome to trading, that's what it is. You know, saying that ups and down, I think now I see why the chart is like this, up and down, up and down. No, that's not the reason why. It don't depicts all trading is, at the end of the day, ups and down. No, it's basically the movement of price. In everything you have ups and down. All right, so without the bag of chatting, let me get right into it, guys. All right, so we're gonna do a market breakdown right quick. Even though I don't really believe in market breakdown because, to be honest, the market do what the hell is the market gonna do. All right. So, before I do that, let me just I'm gonna show you guys this trade I took Friday. Where is it? Oh, Thursday. No, my bad. Thursday. Yeah, show you this trade I took Thursday. All right. So as you see on the chart right now, this is a hold on. This is a US 30. Now the US 30, right? So when I woke up Thursday morning, I never knew the market was gonna close on Friday for indices, the stock market and stuff like that. But I think the forex market was open on Friday. Yeah, it was. Yeah. So when I woke up right here, this way I saw price lingering right at this level right here. No. When I woke up, price was the correction that we got in the news yesterday right here. It was basically correcting itself after that huge dump, and the market was trending up. Then I went back on the chart. I think it was like minutes after 6 going to 7 after my gym session, and I saw this huge tongue to the downside. I'm like, okay, then this look interested. Now it breaks because I guess most of the buyers got out the market, and if you look pretty close right here, let me zoom it up so you guys can see it. Yeah, if you were to look close right here, you can see where the buyers got weak. See that? Got weak right here, then they pick up a little. Weak again, and get some momentum right here. So this is where other buyers, see an opportunity. They keep getting at this level, at the higher highs that we created. See? Higher highs and higher lows that we created. The other buyers start capitalizing on it. However, most of them took profit right at this level. See, we get a tank down right here. Other person came back in who have enough balls to take back a next buy. They came back in right here. However, there was a lot of selling liquidity at this level. See, so the market tanks back down to the downside. Now, when I came in, I was looking at this level right here. And I said, okay then. So waited 9:30. Price came here and it, fluctuated still. We see a little consolidation, especially if you look on the 5 minutes time frame. See, we could see where at 9:30, which was right here, price was basically consolidating. So I said, you know what? All right, let me watch price and see how price gonna react when it comes back down to this level. Now, I literally check the market because the daily, you have to take the daily in consideration. So what I did, I went on the daily time frame and I realized that there was a level on the daily time frame which is the 39,000, and that's a strong round psychological level. Then I got back on the 5 minutes time frame and I literally set an alert at that level, which was the low right here, and I think I also so I set it at the road psychological level of a daily time frame. Price taps into it. I was out with my friends at my job, having breakfast. Yeah, we did brunch thingy. So went out with them. Whilst having breakfast at the table, I heard the signal go up, bim, and one of my first buy triggered immediately. And then when I saw this candle, when I saw this kind. So when the price came here, it triggers my order right here. My order got triggered, and then I saw, okay, then once it got triggered, right, I saw this huge candle right here. Then I got the pullback, and I did a next entry right here. So long story short, so I was in that trade for like I think it was most of the day. I think I closed the loss. So what I did, I took partial profit right at this pullback at 120. Yeah, I took partial profit, and then I closed the next one right here, because normally when you see price give you two top, 1 2, simple means that, especially if there's a rejection, it means that then we're gonna get a pullback to the downside to get back down some full back some order, and then go back to the upside. So I close out these trades. I think I closed out in profit of $1,800 or something dollars, yeah, with this trade overall. So when I was in it, I think when I got here I was at $2,000 profit, but never took it because I had a target. My aim was to get back at this level or this level right here, but I never knew the market was gonna close Friday. Forget that Friday was a national holiday, not really national, but you know, a more relevant holiday where the market was gonna be affected by it. So got out pretty decent. So closed out the week pretty close to 3K, which was really freaking good. Can't complain on that. And that's basically it. So what I'm gonna do now, I'm gonna break down the market. So this is the thing, guys. Whenever you break a market down, right, it's basically just your idea on the market. Nobody knows what the market gonna do. Nobody can predict the market. No matter what your favorite guru talk like, oh, price is gonna do this, price is gonna do that. He's basically speaking of experience, you know, previous price action that he or she saw, you know, in previous trades. So what we're looking at now is the NAS. Now what I normally like to start with is the monthly time frame. It's called top down analysis for a reason. When you look at the monthly, we can see on the monthly where overall the NAS is basically bearish. Cause see, when we came here, this was 2225.02. From the market pull down, this was February 3rd. We never got a pushback to this level, so we tanked down and tapped back right into this area right here, right into this previous high, which is 16458.83. Now this proves to us that the market is overall bearish, right? So whenever I go on the chart, take it down back to the weekly, and we can see where the weekly is showing us a different total different perspective from the monthly time frame, because you can see where the bias came in, take us back out of that level right here, push us all the way back up to 19,000, pretty close, and then we can see where now the last week we came back down, respected back this one psychological level 18,000, and now we're pushing back up. So for me, like I said, the market do whatever it's gonna do. Everybody break it down based on their different you know, understanding our perspective towards our bias towards whatever price is doing. So when price came here, you can see that it came here 1 2 time, right? So this was April 10, April 11th, came back there April 16 and 17. We've seen a push. So we can see where the buyers came in aggressively on this day right here, which was the 9th of April, and we never came back to this low where price closed. See that? See? So we can say the daily is basically creating new high as we speak, or this is a low right here, then we have a higher low right here. See? So we can say the market is in a motion of heading back to the upside. Because see, this, once we take out this low right here, guys, once we break above this low, this previous low right here, retest it, then we can say yes, the market is now bullish. But currently we cannot say the market bullish as yet, because we are still below this level right here. And as you can see, I have some purple lines right here. This These signifies my previous weeks. This loud color right here is my monthly levels. And these are my yearly closer right here. Now you're probably like, oh, he's crazy. Why are you using yearly close for 2023, yearly close for 2024? Now, like I said, the market basically respect these levels. Monthly, previous year close, and the weekly time frame and daily time frame. Now, once you have all of these levels highlighted, or you want to use them as your guidance, right? Then you can go down to the 15 minutes or the 5 minutes for your execution of your trade. Now, trading is mechanical, and when I say mechanical, you need to create a system for yourself when to take trade, the best time to look for opportunity in the market. Now, for the NAS 100 and the US 30, the best time to look for opportunity is 9:30 a.m. Unlike the Forex currency pairs, you can look for opportunity in the New York session, which is 8:30. Even though it is not practice for you to trade exactly 8:30, but wait for the market, to take down some of the momentum. Then you see where the market is heading towards, and you capitalize on those moves. Because remember, retail traders, that's us. We cannot move the market. The market is being driven by the big boys, the Wall Street, hedge funders, and person like that, the banks, stuff like that. So you basically get in the market to capitalize on the moves that they are taking, right? So you basically go with the trend, as they would say, or go with the flow of the market, as they would say. So basically, guys, so that's it for the NAS. When we look at the 5 minutes time frame, we can definitely see where the NAS is also creating new highs. See, we were here April 16, now we're here April 17, and continue on. Now this, you can see that we are creating a nice trend. I don't want to trade the trend lines, but you can see that we are creating higher lows as we go along. So NAS definitely good for buying opportunity coming this week. Bear in mind that we have to check the news also. So when I finish this, I'm going to check the news, and we can also see where US 30 is also creating higher lows also. See, this is the lowest we have been since lowest of last week, April 17, which was Thursday. And then, so we basically, so this is the thing, guys. Now the fact that we came in this, like I said, this is where I put my order in at 39.00, and price went right in there and tapping. Now back to this trade I took. So when I saw price right here moving crazy, this is the thing, guys. You have to be patient. That's the thing with trading. If you come in the market looking for buys, you can take a sell, but you have to have all the T's crossed and the I's dot to say, okay, then this look like a bias for a sell. So I didn't took this trade, but I was on the chart looking at it. It fall right in front of my face, but when you have a plan, when you reach that level where you can see price moving and wait for your trade. This wasn't my trade, guys. This far right here was not my trade. I was looking for buying opportunities. When price topped in here at the, see right here, 39000, that's my trade for buy. And my stop loss was below this level. I think I risked like 15% on the trade, and it was a 15 to let me put it up so you guys can see the RR on it. I don't know why sometimes this computer moves so slow. Alright, so right there. Oh, I got triggered right there. Oh, I think I risked 25% or 20. Yeah, I think it was 20. I don't remember, guys. But I think I did record it though. Yeah, it's something over 25% or 25%, which wasn't bad because I understood the risk of this trade, and I was confident also with this level where we're going to get the buyers to come back in. And it was a, yeah, see, nice trade. So the risk was like 30%, and I went over 3 to 1, see, because it was 1.11%. So yeah, it was a really good trade. Like I said, guys, really freaking good trade. I could have had more positions on it, But I'm not trading like that anymore. I literally don't trade for the money anymore. I trade to get better at it. I trade to improve my trading skill. And I also trade to master the mental aspect of it. Totally not thinking about the money anymore. And my losses, I literally trade to execute the trade the best way as possible with minimum drawdown or very, very tight entries and to capitalize on those moves. That's what I literally trade right now. So when I just start trading, I used to be like, okay, from here to here, I'm going to make 2,000. No, I don't do that anymore, guys. You have to shift your mindset when it comes to trading. Have to do that. If you don't do that, you're going to lose every single trade you take. Or if you do take 10 trades, you probably win like one or two. Because guess what? At that time, you're trading off luck. I don't trade off luck anymore. I trade off high probabilities. I'm objective with the market. I don't feel or believe the market is gonna do with it. Gonna do something. I literally just stay and say, okay, then this is what I'm seeing. It makes sense for a market to move this way. It does not make sense. So you literally make the market prove to you that it's gonna go for a buy or prove to you that it's gonna go for a sell. You don't want to get in the market saying, okay, then I feel like it's gonna go for a sell or I think it's gonna go for a sell. No, the market have to prove to you that yes, the buyers are aggressive. Momentum is in the market for the buy. Okay? Don't try to use your feelings in the market. Yes, you're gonna get hurt. The market's gonna hurt you, it's gonna crush you, and it's gonna take your money. I can tell you because I've been there and I've done that. Okay? So basically, so that's it, guys. And the next thing I want you guys to understand is that with the DXY, which is the dollar, you can also watch the movement of the dollar to see how good the dollar is doing. Because my four peers, which is GBP, USD, UJ, which is USD, JPY, US 30, and NAS, even though I mostly trade the US 30. But these pairs, I also use them because they move in correlation with they basically move like they are supposed to. They synchronize with each other. So first thing I do is to check the DXY, see what the dollar is progressing, what the dollar is doing, if it's going up or it's going down, and vice versa with USD, GP, USD. I use them to know also because once GP USD is weak, 90% of chance USD JPY gains strength basically, and then I use NAS to trail the US 30. Now in trading, guys, what you have to understand is that everybody have a different style. Everybody view the market different. We were all brought up in different backgrounds, so we all think different and we all see things differently. So that's basically it for this video. And I'm gonna do a next video. So I finished reading the book or the Disciplined Trader. So I'm gonna do a quick video and break it down also. So this is the boy Squirrel. Be more FX. Hope you have learned something from this quick video. I might talk a little fast, but if you guys have any questions, just shoot me in the comment. Please like and subscribe and share if you like content like this. Alright, it's your boy Squirrel. Peace out.